Well, it's been a tough week on global markets, with commodities suffering a swift and brutal fall from grace. With more on that and the latest on the vitally important US jobs market, it's over to Jane Edwards.
Alan, Friday's employment data turned out to be a pleasant surprise for financial markets, leading Wall Street higher at the end of a difficult week. The Dow and the Nasdaq added 0.5%, while the S&P 500 was even stronger, gaining 1%. April's payrolls report beat expectations, with 244,000 jobs added during the month, and private sector employment posted its best gain in 5 years. It reassured investors that the US recovery is on track, for the moment at least. But commodity markets are still reeling from Thursday's rout, with most major commodities continuing to edge lower on Friday.
The commodity market is overall, certainly this particular phase of it. I would much rather be invested in the equity of the user of commodities than in the commodity itself.
Oil finished down 15% over the week, while silver slumped by 26% and gold and base metals were down by around 5%. Looking at world share markets over the week, the US finished slightly lower, while the UK and European markets dropped 2% and Japan remained steady. Our local market lost another 2%, as Tom Elliot explains.
Well, as you just heard, it was a pretty average week on Australia's share market. Now, a lot of this is because we saw a bit of a dip in commodity prices on overseas exchanges late in the week. And when you've got substances like gold, oil, base metals and so forth all falling, that tends to drag down a big chunk of the Australian share market. Companies like BHP, Rio, Woodside Petroleum, Santos all saw their shares fall during the week. In addition, the Australian dollar, although it was weaker over the past few days, remains near record highs against the US dollar, and this is going to severely crimp the earnings of any companies that have US dollar denominated profits, or indeed profit centres from overseas. So as a result, stocks like BlueScope Steel, MacArthur Coal, also weaker over the last few days. The banking sector turned in a rather mixed bag during the week. Now, interestingly, 3 of the major banks, ANZ, Westpac and NAB, all reported decent increases in first half profit, and yet only the NAB saw its share price rise. And the reason for this is that NAB appears, through its Dear John campaign, to be stealing market share from its rivals, and that's something that analysts really like to see. Turning to the media sector, and we saw 2 pretty nasty profit warnings from both Fairfax and APN, and this really cast a pall over the entire sector. Channel 10 shares were down, the newly named Seven West Media, formerly West Australian Newspapers, weaker, News Corp, all sold off during the week. Telstra was another company, a rare company to actually rise during the week. Now, the NBN is going absolutely nowhere at the moment. Telstra, in the meantime, is expanding its broadband offering to business clients, and this saw the stock close stronger during the week. Finally, the federal budget's next week. Who knows what's going to happen? That cast a nervous tone over Thursday and Friday's trading. Winner of the week is Extract Resources, up 12% on fresh takeover rumours out of China. Loser of the week is Fairfax Media, down 15%, due both to the aforementioned profit downgrade and another round of outsourcings.